Many people didn't expect 7830 this early. So where from here is a very important question. Our market master, Dipen Sheth, Head Institutional Research at HDFC Securities, joining us to answer these and other questions. Thank you very much, Dipen, for joining us. Have we run too much and too hard and too fast in the short term? Should the markets, will the markets, more than should, take a bit of a breather for a quarter?
Will they or will they not is a dicey question, quite frankly. We've had this huge reset that has happened over the last few months, and we are at an all-time high. India is a consensus buy. Everybody is saying, everybody and his mom-in-law is saying you should be buying India in every corner of the world. We've got it all right, and we are on the verge of breaking out as a nation. Or are we? That is the question. I don't think there is any argument or debate on the fact that we are definitely on much better ground than where we were 2 months or 6 months ago or 2 years ago, or that we are going to be on much better ground than here in 2 years from now. The question being asked is, are markets a little ahead, a little too ahead of the current reality or not? When everybody gets together and says the party is on, then I look for party poopers. That's been the conventional wisdom. This is not to disagree with the broader picture. So we've got this new business-friendly government, fresh faces, 282 seats in parliament, a huge demographic dividend staring us in the face, endless supply of labor, voracious consumer demand, $1 trillion of infrastructure crying to be made. Tons of reforms in, you name it, whether it's law, whether it's corporate law, whether it's labor, natural resources, energy. So I'm not denying the fact that India is a great place to be in. But we've seen this big run-up in the markets. Valuations are now reasonable in many cases, a little more than reasonable. What are we doing as a broking house? We are going around meeting companies. We are going around, checking on the ground what's happening. So the movement is not really happening as soon as everybody is aspiring, and it's not happening as fast as what the numbers in the markets are saying or the indices are saying. So there's going to be I suspect there is going to be a little bit of a pullback from here. It doesn't spoil the story. It's a little bit of a road break, a speed breaker in the road. So that's how I would put things.
But where is the bottom? Can it go to 7,000? Can it go to 7,500? At what level will you stop selling if you're a trader?
No, I'm not selling. I'm just cautious.
Okay.
I'm not saying the long only should be booking profits now. I'm not saying the story is over by any stretch of imagination. But you don't have, stock markets don't move in straight lines. It's never smooth sailing all the time. And it's when everybody starts dancing in the party that maybe the lights will go off for a while, So that's the fear I have. God knows we've messed up too often as a country. When has the world not been hopeful on India? So that's the only thing, you can't have a great batsman score a triple century for 6 innings in a row or something. Mr. Kohli gets out first ball, and that's okay.
Okay. So it's too much of a good thing fear that you have at this point.
So it's a good batsman. It's a good journey.
We are getting a bit of a reality check now. If you look at earnings season, especially in the broader markets, names like M&M Financial, names like ING Vysya Bank, TVS Motors. It's not that the earnings are shocking, but it's just that the expectations were so high because the stocks have run up so much.
Right.
So in a sense, do you think that from the earnings season, we would sort of get a lot more disappointments?
One, I don't think earnings this quarter or last quarter for that matter, and I said this on your channel, I don't think the earnings are to be closely seen except for very large movements. So what you're seeing now is the result of the way business was done when this government wasn't in place in any case. If you want to gather a sense of direction, yes, maybe you will see. So like the economy has bottomed out, we are claiming we're at a cyclical bottom. So we will probably see earnings growth also kind of bottoming out this quarter or maybe even the next quarter, because we have a slightly late monsoon and we will have indifferent spends on many infra and cap good spaces for a while. So I wouldn't look too deep into earnings except if big deltas come across. And then there are sectors where, arguably the last government didn't really matter too much. So if you look at IT, and frankly, I don't think Wipro's as big a disappointment as what the street is making it out to be this morning.
So it's
going to grow at 9-10% this year. There is a theory, there is a thesis of growth coming back to Wipro over a period of time. They're fighting back, and it looks to me that this fight back is going to be slow, gradual, but reasonably certain. So it's certainly not time to punish them.
Okay, where are valuation gaps? Say, let's start with finance. In finance stocks, will you buy anything? What would they be?
So finance is naturally a proxy for the broader, economy, and finance has been one of the most battered sectors over the last 4 or 5 years. And of course, it's the PSU pack which was battered even more than the rest. In fact, the privates went ahead and made lots of money for their shareholders. So does it mean the PSUs are going to make a miraculous recovery? Of course not. Like I said, we've been meeting managements. We met a large PSU bank a few weeks ago. The sense that is coming out is that they're short on capital, they're short on talent. The NPA cycle is showing signs of easing off, if not turning around, but it's going to be a long and messy road. Many PSUs are available at 1 time or less than 1 time adjusted book on F16 basis. For some of them, it's F15 also. The thing is, the adjusted book values, and I never tire of saying this, have been affected not so much because of reported profits, but because of the gradual erosion that has taken place on account of asset quality. And the large net NPAs, if subtracted from their book values, are giving absurdly low adjusted book values. That also puts strains on their capital adequacy.
So are you buying? Not buying, therefore.
So I don't buy or sell. I advise people to buy or sell.
Yeah, I mean, what is your advice on?
So we are saying there is lots of value in the PSU pack, especially so don't look for the volatile and unpredictable names. Don't look for dramatic turnarounds in a PSU bank, in PSU banks which are in very bad shape. Look for PSU banks, irrespective of size, mind you. Look for PSU banks where even during the painful period, commentary has been or performance has been in line with commentary. People who've got a fix on asset quality, people who know exactly how bad the situation is. And there are decent examples there.
Like which?
So, Oriental Bank of Commerce, if you will. So, and they have a large infra exposure. They've been seeing huge slippages.
What about BOB, both rose along?
So, BOB has a fantastic corporate lending franchise. If there is, and they've held on to asset quality tenaciously, even in the face of very difficult times. And the times will only improve from here. But is it all going to kind of start shining? Is the sun going to come out in a quarter? Of course not. BOB is going for around a book.
Within the mid-cap space, you have a couple of stocks that you like. Just take us to them, Pidilite and Banco products.
So Pidilite is actually costly. It's about 26, 27x. But my word, what a business. Completely in alignment with what India wants. So if people are going to make more houses, people are going to make more furniture, and Pidilite is making the kind of products which nobody else makes, not at that scale and that level of distribution. Completely unique products, high gross margins. You get volume growth and you will get disproportionate margin growth. I don't mind paying 30x for them, if you ask me. And 2 years down the line, if growth is higher than what we are anticipating now, then the forward-looking numbers will look even rosier. And then you will say, oh, but Pidilite looks cheap,
Okay. What about real estate? Because we saw some beginnings of people beginning to give some respect for that sector.
So, do I like real estate? No, I think it's horribly overpriced for most Indians.
Okay.
It's horribly overpriced and unreasonably
Houses are,
so.
I agree, but what about the stocks?
And it's unreasonably so. Yes, exactly. So I'm coming to that. And the reason for this is the completely distorted market for land. Okay, there's a total governance overhang on the supply and on the market for land, and that's what is leading to it. So we live in Bombay, and you know what it is like here. There's hundreds of acres of land which is lying vacant, and which doesn't come into the market, which is why you have these absurd prices. On the other hand, when it comes to specific companies, the problem with real estate companies is that capital allocation is always a fight there. And invariably, return ratios are skewed downwards because of the fact that they are over-invested in land, because the market for land is, distorted, and they don't want to take chances, and they buy years and years of pipe for land. And strain their balance sheets.
Yeah, you like Kolte.
So we've been gung-ho on Kolte Patil for a while. There are 2 reasons here. One, there are triggers in the company in terms of permissions opening up and large developments getting more visible over the next few years. 2, the bulk of their business is in Pune. which is a city, I believe, which is likely to do very well. Not that it's ever done badly, but which is likely to do disproportionately well in the new scheme of things. You know, it's a large industrial center. It's got a large number of educated, talented workforce. So whether it's IT companies, whether it's cap goods companies, engineering companies, they're all there. It's within shouting, or shall we say driving distance from Bombay, and hence a lot of spillover demand from Bombay could get there. And they've got some 9-10% market share with high visibility on projects, a very tight leash on capital allocation.
On that point, we have to hear out a housing finance company which posted numbers, India Bulls. The management spoke earlier, and here's what they had to say.
The guidance given by the company is 20 to 25% growth. With all the welcome changes which have happened and which are continuing, I would be more optimistic to close the year at the higher end of the range. And if you would look at the comparable peer set, then the comparable peer set for us is housing finance companies and not non-bank finance companies. As a housing finance company, we enjoy benefits of scale, of better credit ratings, of over a period of time, building a much larger business. But as an NBFC, there is a lot more of flexibility, which a housing finance company does not enjoy. REIT would just make the whole commercial office space a lot more robust, so it does not really directly impact us, but I believe that one would see a lot more of money supply into the commercial office space, which overall for the real estate sector is healthy. But as a direct impact item, it doesn't either impact us positively nor negatively. Now, I am extremely positive about it. It just not only gives a direction of where the government wants monies to flow, the complementary action by RBI is also extremely heartening, and I believe that this will add to become a good source of financing for housing finance companies, as we are solid originators of home loans of below 25 lakhs. And these loans will be now, really welcomed by all types of banks. So there would be a very robust downward selling market in the whole affordable housing segment. Spreads are stable at 350 basis points for a book and 310 basis points for incremental lending. This has been the trend for approximately 7 quarters now. So we maintained spreads for almost 2 years in this range of 310 to 350 basis points. And going forward as well, I believe that for the rest of the financial year, spreads would be broadly in the same range.
Okay, so that's India Bulls Housing. Well, Dipen, we wanted to ask you this question ourselves, but our money control viewers can also ask you this question. So that will come up for you. It's a question on JP. The Taka deal being the Taka group pulling away its money. What is your view on that stock now?
I don't think arithmetically it changes a calculated, fair value for the stock. But the beauty of, or the good thing about this deal was that it was going to ease balance sheet pressure and help the group deleverage and perhaps increase visibility on some of its projects on equity funding for its, or on funding for its some of the projects in the pipe and so on. So to that extent, of course, it's a negative development. Now I think we'll have to figure out whether they can, get to alternate.
Okay, actually, let me read the question now that it has come up on the monitor. Anu writes to us from Ghaziabad. She has the stock which she bought around 73 rupees a share. She's asking you if she should stay invested.
So that's Jayaprakash Associates, not Jayaprakash Power.
Associates,
On JP Associates, I think they've got this huge cement capacity spread off all across the country, and they have, a contracting business. They have stakes in various group entities. So, and it's a leveraged entity at, the consolidated level. There are clear issues in terms of, the kind of spread that they have on the businesses in a leveraged situation. But this is the time for cyclicals to make a comeback. You can't be bullish on India and bearish on Jayaprakash at this price. So I think it's a philosophical take that I'm giving you here. Do I like to see such a highly leveraged company, and would I be a buyer? Maybe not. But you've been seeing it at 30 and 35 rupees and, had the guts not to sell. So hang in, you'll make your money.
Well, Dipen Sheth, thank you very much for joining us and taking us through a lot of macros and micros.